what a lot of people don't necessarily understand about crypto consumers, and I think people who don't have crypto, they don't understand like what does it mean to actually own it. Most of the individuals that we've worked with, they didn't buy Bitcoin 6 months ago. They probably bought Bitcoin 6 years ago. Right, so they've gone through these peaks and valleys in price, and it's a very emotional transaction because they want to continue to own it, right? They have this thesis that it's going to be worth significantly more in the future, and being able to give them that optionality to basically buy that home today is incredibly important. And alternatively, they would have to make a very difficult choice, right? Sell something that now has essentially become an extension of your own identity, right? Of who you are as a person, because you bought Bitcoin. It's become your network, right? Like you've associated with people, like you're on forums, you're following, you're reading, right? You're getting educated. I found out that this is a much more sort of engaging relationship with these consumers, and the trust factor of them pledging it with us. It's something that, I personally view as a very, very big responsibility.
Hey everyone, welcome back to Bitcoin is Hard. This is a Choice App production about Bitcoin and personal finance. I'm your host, Brian Harrington. Today, we're here with the CEO and founder of Milo Credit, Josip. And today's episode is all about real estate again, and specifically their crypto loan product that they have out. They've released two big press releases about the amount of crypto loans that they've processed, and then also a big one that just came out recently about their now refinance product. And so I'm pumped to dive into that. If you are liking these episodes, please like and subscribe. And also, if you're listening on the audio only, leave a review. So, Joseph, what we try to do with this podcast is carve out space to talk about Bitcoin and personal finance. And people ask all the time, just like mortgages and homes and real estate is a big part of that. So, been just pumped and looking forward to this episode. So, tell us, introduce yourself and just tell us, why did you found Milo?
Yeah, it's great to be on the show. So I'm Josip Rupena. I'm the CEO of Milo, and I started the company a little over 3.5 years ago with this ambitious goal of seeing if I could make the mortgage process better. And we started out doing this for individuals that were international, that were buying and investing in the U.S. I had seen that through my background. I started in finance, working at Morgan Stanley, working with high net worth individuals and Goldman Sachs, and seeing that this is something that they were doing, but they were doing it without a loan. And everybody tried to convince me that it was because they didn't want a loan. The reality is because it's fairly hard for them to get a loan. They didn't have a social security number. They didn't have income. They didn't have all these conventional things. And when they were asked that, they were never going to be able to provide that. So that was really what prompted me to start the company. And then through that journey, saw that for individuals that had amassed crypto wealth, they were experiencing very similar challenges. And I had this idea back in 2017. I would have thought that someone would have been able to do something about it by 2022, and it wasn't the case. So I think it was really sort of up to us to do that.
So to me, that's immediately what I saw was different about when you guys released your initial press releases about your crypto product was, wait a minute, they're not they've already been doing loans. They've already been doing loans for individuals without the social security number and without the verifying income. That it was amazing. So then tell me more about the connections you saw between both those crowds. Why it also gave me your answer to your why Bitcoin. It doesn't feel so hype driven. It feels literally product driven based on something you had already been seeing and were doing.
Yeah, absolutely. And I think that we've done over 100 million in our loans for other international consumers, and that's meaningful because we had to go through a journey of one, learning what's mortgage, two, coming at it from a product perspective and say, well, this should be easy. This should take a day to get this done, and then going down that path and realizing, well, appraisals take 2 to 3 weeks. You have to get title. Things come up through the process. You've got to go through inspections on the property, making sure that it's a good property for everyone involved, and just sort of learning through that and seeing that there's a number of places that the product and the experience could be improved, but there are structural limitations because of regulation. And so that was one of those elements where you're absolutely right. We had experience doing this, and we were already doing this for an unconventional consumer. And then the ability to say, right, do I believe that some other teams are going to be able to come in and launch a crypto mortgage or launch a solution? I was hoping that someone would, but it wasn't the case. So yeah.
Same. No, big same on that for me as well. what background does the listener need on, like, do we have to talk about what's the difference between a qualified and a non-qualified loan, or do we have to talk, like, how do I get the answer from you of just why is a social security number needed, why is debt to income, like, or is it, are we talking about the ability to repay rule, like, what, I don't want to throw out buzzwords for the sake of throwing out buzzwords.
Yeah,
How do you describe, like, what is the problem that
yeah,
the international, like, international people are
yeah.
having?
Yeah, I mean, I think you touched on a bunch of really great points there, right? Sort of like ATR, right? Ability to repay, and sort of all this regulation that's around it. Um, I think it's helpful for people to understand that most mortgages in the U.S. and the reason why we have mortgage rates that are really low, it's because those loans essentially go to Fannie and Freddie, right? These quasi-government entities that were created to promote homeownership, right? Promote primary homeownership in this country, right? The American dream, right? That everybody has a right to own a home in this country, and if not, own multiple homes. And so it starts with that. And in order for this to be scalable, where $2 trillion of mortgages get originated a year, they've got to conform to some type of standard, right? It's got to be fairly consistent. You've got to have this sort of like pass or fail methodology so that originators can go out and do loans. And customization and bespoke structures don't really work well. So that means that a significant portion of people who want to buy homes who are financially qualified to do so but can't document things in that way are immediately disqualified. And that's prompted this whole other universe of sort of non-qualifying mortgages that tend to go and be at higher rates, and they tend to go to PIMCO and DoubleLine and BlackRock, right, and all these other institutional players,
Mm-hmm.
because they say, we're very comfortable with getting paid a little bit more interest to lend to these individuals. Um, and that process is something that has ebbed and flowed over the last, call it 15 years of sort of this non-conforming mortgage pool of individuals. But that's an important consideration because if you're a foreign national, one of the requirements is that you're going to have a social security number for a conventional loan, right? You're going to have to be living here in the US. You're going to have a job. You're going to have tax returns, and you're not going to have
Mm-hmm.
that. And people that have crypto wealth, very similarly, some of them are generating income through DeFi and through
Mm-hmm.
investing and staking. That doesn't really document too well, right? That's
Mm-hmm.
not something that you're
Mm-hmm.
going to be able to go and say, here, I'm going to get a really nice W-2 or a great 1099 to
Yep.
be able to sort of prove this and file my taxes. And many individuals have tried, but it's very hard to sort of build that financial picture that's required to get a
Well,
conventional loan. And so,
and even a traditional self-employed person,
yeah,
there's a tension between using the tax code to drop your, like, taxable income through writing off business expenses, but then when you show that amount of income then to the loan processor, that, like, it's, there's a tension there between wanting the high number for loan qualification but then wanting the low number, and that's even within the existing framework of, like, a normal
yeah,
self-employed person
yeah,
in the United States, and that's frustrating.
yeah.
It
Yeah, absolutely. I mean, in the non-qualifying mortgage space, I would say that the majority of the loans that fall into that bucket and categorization are self-employed borrowers, right? If you go and you
Mhm.
start a company and you have a few employees, you may be paying yourself through a W-2, but you're still designated as a self-employed, and you're going to have to probably get a non-qualifying mortgage. And as you've seen over the last sort of, I would say, sort of 5 to 7 years, there's a lot more individuals that are taking up, sort of sole proprietorships and setting up their own businesses to do that. And yeah, you want to pay as little tax as possible. And the tax code is set up for those write-offs.
Yep.
And I
Yep.
don't think most people say, well, I'm gonna file my taxes just so that I can get a mortgage, right? I'm gonna pay more in
Mm-hmm.
taxes willingly, so one day I can qualify for a mortgage, right? It's an
Mm-hmm.
afterthought.
Mm-hmm.
So I think that's the real opportunity is not necessarily trying to get people to fit into a box that's never going to fit for them, but basically saying, all right, we have to like fundamentally change the box. You got to
Yep.
change the structure, and then you'll get more people in it.
One more question about definitions then. Are all non-QM loans hard money loans, or what does hard money mean?
Yeah, yeah. So I would say you can describe it in sort of three broader buckets. You've got conventional loans, right? People that conform to be able to sort of get that sort of subsidized, super prime sort of conventional mortgage, which incredibly, those rates today are, a little over 6%. Where I remember 6 months ago, you'd tell someone 4%, right? And their head would almost explode. And
Mm-hmm.
now, we're at 6% for that super, super prime borrower. Then you've got sort of non-QM, which are the people that have self-employed income, bank statement programs, other characteristics, right? International consumers fall into that category. And then you've got hard money, which usually tends to be a 1 to 2 year type of bridge loan that is financed by maybe a local attorney, or there are some institutional platforms that have spun up, but fairly short-term bridge for investment properties. Rates tend to be between sort of 9 and 13%. And usually are 50% loan to values. That tends to be sort of hard money. So those tend to be bridge, right? Sort of like getting yourself to permanent financing, but you got to close your loan really quickly, and you may
Yep.
not have enough time, and you don't have all the cash to make a cash offer, right?
Yep. What I think is interesting about that, I like those three buckets. And then what I think is interesting about the line between non-QM and kind of then hard money is like prop tech and these like nice software service. Like, dude, your site like feels good. Like I was playing around with the rate tool this morning. Like people should play around with the rate tool. Like do this. But you and others are making it feel so clean that like I think that line between what is non-QM and what is hard, like it just because it feels like using a nice app. So I think
Yeah.
that is gonna start to change people's opinions. Like my opinion is changing, and what you just said,
Yeah.
you're right about the prime borrower. I think like I appreciate how direct you are on like saying the prime like rate is subsidized, and we can talk about
Mhm.
how that flows into then increased housing prices and things like that.
Yep.
But then how you're correct. If the subsidized rate, if the prime rate, the in the box rate is already at 6, and then you start to play around with these other software tech tools, and it's like, well, the math is just the math, and with this like collateral, your rate is like 7 or 7.5 or 8. That's not that big of a stretch anymore. It's not like you're
Yeah.
subsidized now all the way at 3, and now we're talking
Mhm.
about 8. It's
Yeah.
very that's what's
Yeah,
making it all
it's
interesting.
a spread. Yeah, it's a spread to that, right? So if you say, all right, well, what's an acceptable spread? Well, if you got everything and to be able to sort of document and prove everything, then you're going to get a 6. Now, if you're a little different, you can still get a mortgage. It's just going to be at a slightly higher rate. So then now you have to determine whether that makes sense for you. And I think homeownership is very sort of case by case specific, right? Some individuals want a home, some people want to rent, some people, it may not be the right time, right? So I think that was one of the things that we learned along the way is that we thought that what people wanted initially was the fastest experience, right? Being able to go from like close a loan in 5 days, right? Sort of like,
Mhm.
and what we found is that what most individuals want is certainty that the
Mhm.
transaction's actually going to happen, right? Because it doesn't matter if someone comes in and says, you're going to get a 6% mortgage. If you're truly in that, non-QM, right, non-qualifying mortgage
Yep.
camp, they're going to change the conditions on you and you're going to be upset. But the reality is like they should have just given you the right information day one and just been honest with you and truthful. So, a
Yeah.
lot of what our product experience is to give that certainty up front, to let someone
Mhm.
know if you work with us, you're going to get a loan, right? Like we're not a broker. We're not an intermediary. We're going to fund your loan. We're going to fund your transaction. And you're going to know that you're not going to get left at the altar for that mortgage transaction that you put, real money, right? You put a deposit down, you put an escrow, right? Like you've got real dollars at risk. It's going to happen. And, a lot of people get bogged down with rates, but the reality is that you can always refinance, right? If 2 years
Mhm.
from now rates go lower, you should absolutely refinance. But at least you've got the home, right? Like you've got that property that you wanted to transact today, and hopefully it's appreciated over that time. And that half a point to a point difference might be immaterial if the property is appreciated 10%, right? You're going to be happy
Mhm.
that you did that transaction today. So,
Mhm. Mhm. Perfect. And what I meant to say about that line between the non-QM and the hard money also, just because I've noticed on other sites, they're kind of advertising or do have advertising for 30-year fixed now also. So it's like that, yeah, just different types of financing
yeah, it's
for
definitely
the
sort of
30
blended
years is
between sort of
interesting.
the bridge product, which is a 1 to 2 year type loan, and then you've
Yeah.
got that 30-year more permanent financing that gives individuals more time to decide what they want to do. Um,
Yeah.
the reality is though that if someone's getting a 7 or 8% mortgage, you can have a 30-year mortgage, but in 2 years, if rates are 4, right, you're gonna refi out, and
Yep.
we've seen that historically, most people end up keeping their properties somewhere around 5 years. The
Yeah.
30-year just helps you because you're amortize the loan amount over a longer period of time, which lowers your monthly payment, and that's helpful. Some of the things that we've considered around that is for many individuals. cash flow and how much they actually make in mortgage payments is really important. So we structure
Mm-hmm.
most of our loans as interest only for the first 10
Mm-hmm.
years, and then you do amortizing for the next 20 years. But if you keep that
Mm-hmm.
loan for 5 years, at least you had a lower payment for 5 years, and you can always choose to amortize your loan through that period of time. But at least you know that you're not having to pay more, and that amortizing loan payment usually is about 20 to 25% more per month, which for many people that might be helpful to pay 20 to
Mm-hmm.
25% less, right, and than
Mm-hmm.
a conventional mortgage, right?
Okay, talk us through that because I had open my scenario of a $650,000 house in California, and I for the sake of argument I was running the no FICO non-US citizen because I just love that you guys
Mm-hmm.
have that. Like
Yep.
so 650 in California, no FICO non-US citizen, and I was looking at the 30-year fixed, and then I was opening up the crypto rate tab, same thing, putting in 650, and I was looking at the difference between the and I
Yeah.
know it's all just advertised rates, I understand, totally understand that,
Yeah.
but it's just like
Yeah.
for sake of argument seeing between the screens was very cool. So seeing the crypto page, so the crypto page, is that a 30-year fixed or it's the
Yeah. Yeah.
one you just
It is.
described?
Yeah, it is a 30-year. It's a 30-year mortgage. Um, so you can probably see that that rate is actually probably lower, right,
Right,
on the crypto mortgage.
right.
So that was also something that was important for us is we want to get a mortgage like this into the hands of as many consumers as possible, right? Like we want to incentivize homeownership. So the reality is that we're subsidizing this right now to help consumers,
Hmm.
because if you go today and you have a perfect profile and you're getting a conventional mortgage, right, your rate's going to be 610, 625.
Yep.
If you're going out and getting a non-QM mortgage for bank statement program, you're probably going to be somewhere in the sevens to eights, right? So
Yep.
we're right there. So I think that we definitely are trying to promote this solution for people
Yep.
and offer them that 30-year mortgage.
Tell tell us what that term means, the bank statement programs, because that's where, so it's instead
Yeah,
of showing your income verification, it's just showing assets in a bank statement, right? And then is
yeah.
that describing the crypto product is the same thing? Like you're showing the crypto assets is the same as showing the bank account assets.
So a little different. So if you think about a traditional loan, you're going to have certain elements of it, but there's going to have to be some income component, right? How do you make monthly payments, right? And you can say, I have a job, so that would be conventional sort of documentation, right? You have a W-2, you have a 1099. Then you can have a non-qualifying mortgage structure where an alternative underwrite would be, show me 12 to 24 months of your bank statements, and I will look at that amount coming into your bank statement, and I will basically take all those values and divide them by a factor, and I will come up with an income number for you and reverse engineer what your income would have been based off of what came into your bank account. So that's really good
Hmm.
for self-employed individuals. So
Yep.
you would satisfy the
Got
income
it.
underwrite.
Got
The
it.
way that we do it is that for many of the individuals and the loans that we're doing right now are for investment properties. So we are considering the cash flow of this property and the rental income to help solve for that. So we're less concerned with individuals' actual income. That is very hard for them to actually document if they have crypto. And we're looking at what this
Yep.
property will actually generate on its own. And that makes it easier to be able to sort of come up with a good holistic profile of the borrower, because we know that there's going to be a tenant that's going to basically be able to satisfy mortgage payments. And the crypto there for us is, think of it as just protection in the event that this person
Yep.
can't pay it. We actually have that, and that gets us comfortable to underwrite
Yep.
this individual.
Yep. Well, and that's what I thought. That's where I thought the kind of lower interest rate was coming from. Of like you have the Bitcoin as collateral, and you have the house as collateral, which I understand 100% of the house is at the beginning, but then as it gets amortized or as it gets paid off down, it's like the risk is lowering for everyone. And I thought that might
Yeah,
be what was blending it. But so interesting.
yeah,
The
yeah.
majority of your
Yeah.
crypto
I
loans.
wish. Yeah, yeah. Definitely. Like on that point, where like it's one of the things that's fascinating about mortgage is that as you deal with different institutional counterparts, and you look at mortgage and you say, well, yes, in theory, if you have more protection, you should be able to get lower rates. The thing is that
Yeah.
at some point there is a natural floor because it's
Yep.
invested capital, right? And
Yep.
capital on a risk adjusted basis, you can say, well, I can give you money for the next 30 years at, let's say, 6%,
Yep.
or I can go around and I can take that same amount of capital and I can invest it somewhere else and maybe lock it up for 2 years or 3 years.
Yep.
And I think that
Yep.
that's the part that I think is really fascinating about mortgage, is that you say the borrower actually has an option to pay you back whenever they want. And usually it's at the worst time for you because they're refinancing when rates are lower, which means now I need to
Yeah.
take that capital and reinvest it at a much lower rate. But I, as a lender, I'm giving that consumer capital for the next 30 years, but rates could be 10%, right? In a year, they
Yep.
might be much, much higher, but I've locked myself into invested capital at 6%. So there is
Yep.
this place where there's like this natural floor, that if you didn't have, government subsidies on the conventional side, mortgage rates
Yep.
would probably be across the board. They'd probably be 8 or 9%, maybe even higher, right? Because,
And they'd probably be very much like, we wouldn't have the 30 years ingrained in our brain either. It would just be
right,
very, because you would have more knobs to play with. But
yeah,
because we have in our brain like this one way of doing the mortgage within the box, it's like, and because that's who, like, how home buying is competitive. Like, that's who I'm in the market, like against. And I think previously, like in the last 2 years, when people were realizing, how hard it is to get your offers accepted,
hmm
it's, or just how hard it is to think about like owning homes when they do feel expensive to a lot of people and feel expensive to people's
yeah,
like income. Part of what's driving that up is the like subsidized low rates that honestly
hmm
are gate kept, and the
yeah,
subsidized low rates are gate kept to a certain demographic of people.
hmm yeah. If you look at like where it costs you to get a mortgage now, your carrying cost, your monthly carrying cost on mortgage cost is 70% higher than it was 6 months ago. That has an impact, right? And in theory, it should have an impact on prices. I think that what remains to be seen is if someone took out a mortgage and they got a mortgage at 3%, and the home is worth more today, they would have to go out and buy a home, and they're going to have to basically buy a home and now get a mortgage at 6%. Does that actually make financial sense for them? And I think when you
Yeah.
do the numbers, for most people, they're probably just going to sit tight. So there's unlikely to be this abundance of inventory on the market to
Mm-hmm.
actually lower prices on the margin. Now it might be that some individuals who potentially maybe bought a home at 1 million and then now they think it's worth 3, and they're going to have to reduce it. Maybe it ends up selling at 1.5, right? From a
Yeah.
data point and from a statistics perspective, you're going to say that home prices are down 40%. The reality is that they're still up significantly, right, from the basis of where they bought the home maybe a year and a half ago.
Yep.
So it'll be there's going to be some fuzzy data out there in terms of sort of like real estate prices.
Yep. Talk to me. So tell me what you've learned about, just so from you launched the crypto product in April, it hit the 10 million in funding, just released refinance now. What have you like learned by trying to, or just by engaging like kind of crypto people?
I think that what a lot of people don't necessarily understand about crypto consumers, and I think people who don't have crypto, who don't own crypto, they don't understand like what does it mean to actually own it, right? And the factor of, and what I mean by that is, most of the individuals that we've worked with, they didn't buy Bitcoin 6 months ago. They probably bought
Mm-hmm.
Bitcoin 6 years ago, right? So
Mm-hmm.
they've gone through these ebbs and flows of peaks and valleys and sort of price and it's a very emotional transaction, right? It's emotional because they want to continue to own it, right? They have this thesis that it's going to be worth significantly more in the future, and this element of being able to give them that optionality to basically buy that home today is incredibly important. And alternatively, they would have to make a very difficult choice, right? Sell something that now has essentially become an extension of your own identity, right, of who you are as a person, because you bought Bitcoin. It's become your network, right? Like you've associated with people, like
Yep.
you're on forums, you're following, you're reading, right? You're getting educated, and then you would have to give that up just to buy a home. It's something that a lot of people wouldn't necessarily do. So I think that I found out that this is a much more sort of engaging relationship with these consumers, and the trust factor of them sort of pledging it with us. It's something that I personally view as a very, very big responsibility because of how long they've held this crypto. So I think it's a fundamentally different transaction than just a straight up mortgage, right?
Mm-hmm.
We're there, we're aligned. Like we're all trying to basically make sure that this turns out to be a good transaction for.
Mm-hmm. And so what? So if I come with my, so is debt? What else is required? Like other than the Bitcoin, other than the 1-to-1 Bitcoin, what
Yeah,
else is required?
yeah. Yeah, so we're going to run an appraisal on the property, right? I think that that's everyone wants to know exactly, hey, how much is this real estate worth?
Mm-hmm.
It's good for the borrower.
Mm-hmm.
It's good for us. We're going to make
Mm-hmm.
sure that on the title there aren't any issues. We're making sure there's no
Yep.
liens. There's nothing there that supersedes our position. We're going to look at people's credit, not from a qualification perspective, because that allows us to basically look at just the history, right? Like, how are these individuals? We're going to be able to run, KYC. Who are we interacting with? AML. We're going to look at their crypto. We're going to make sure that the crypto is good. Um, like I mentioned, around sort of this long term relationship, right? For us, we get the question around, what crypto do we accept, and we're comfortable right now with Bitcoin and ETH and sort of USDC, because we know that those have the most amount of history. And if I say, all right, 10 years from now, 20 years from now, 30 years from now, what's still going to be out there and outstanding and has some survivability, that's where we've made that bet. So we want to make sure that crypto is good, right? So we
Yep.
run diligence on that. We want to look at that they have, some bank account, right? Like, we want them to be able to make payments somewhere, right? So most people, from a convenience perspective, they just set up auto ACH, right? So we're gonna look
Mm-hmm.
at those elements, and making sure that nothing sort of jumps out with the transaction. But outside of that, it's a very sort of streamlined process, um, because we're not having to scrutinize their actual income, right, and make sure that those
Mm-hmm.
statements are good, or like, hey, please tell me why, like, 4 months ago, right, like your income dropped by like $1,000, right? Like that's really not that important of a consideration for us.
Mm-hmm. Does it need any income, or can I hook up an ACH bank account with $0 in it?
Yeah, you can do that. We've given people the option if they want to actually pay in crypto. Their mortgage payments right now, most people though are paying with just an ACH from their
Mm-hmm.
bank account, because of the convenience of it. There really isn't sort of a digital wallet with ACH capabilities today, to be
Yep.
able to do that.
I
So yeah, so that was the other things that we sort of looked at, is that you think about from the experience perspective, but a lot of the infrastructure still needs to be built, and you don't know what
Yep.
needs to be built
Yep.
until you actually dive head first, and then you, you
100%.
you work your way you work your way through this, right?
No, I'm just laughing because I've tweeted a lot about ACH backwards compatibility. That's awesome.
Hmm.
How
Yep.
does the can you um can you walk me through then just real fast how the non-FICO non-citizen loan works then too? What do you
Yeah.
need?
Yeah. So very very similar aspects. Minus the the Bitcoin and sort of ETH and crypto aspect
Mm-hmm.
to it. The difference is going to be that on the crypto loan we can finance up to 100% of the transaction. Right. So basically, we could do 100 LTV. You don't really have to bring any dollars to the transaction outside of your
Yep.
initial sort of escrow deposit. And on the international consumer or investment property product, that's usually going to be sort of 70 loan to value, 75 loan to value. So they're going to have to come up with a deposit of sort of 20 to 25%. But the rest of the characteristics are going to be very very similar.
Cool. Cool. That's beautiful. What I say we cap it there and kind of just leave it super solid, like for people. What else should we know from your like latest two press releases, or like what else do you want people to know about the product?
I think the element of the refinance, right? So that
Mm-hmm.
product itself, um, we launched that product on the basis of customers asking us, can I refinance? I bought this home a year ago. I had to
Yep.
sell some Bitcoin. I really had no choice. Um, and now this is an option for them to take some of that cash out. Hopefully they sold Bitcoin at 50,000, and now they
Yep.
can go back out and say, here, I'd like to sort of cash out, and I'd like to basically either invest or buy more property, or or buy more Bitcoin, or I buy back. Um, so we're seeing this as a use case. This is something that, as we were going through the process, people were asking us for this, just like the 40% down stablecoin product, because there are so many consumers that we found that were saying we're living in this digital world. We don't really earn dollars. We don't really do this. All of it is tied up here. It's going to be really hard for me to reverse document all of this for the last few years. Um, could you come up with something like this? And we did. And I think the direction that we're going into is getting away from that sort of one to one, and what else can we come up with so we accept a lot less, and then this starts to feel more like a conventional product. And then the element of branching out and then doing primary home loans for more people, and then sort of just continuing to see
Yep.
how do we serve more and more consumers over time, but making sure that we're doing it in a compliant manner, because we have a responsibility to sort of this category that if we do things right, then I think it'll grow and more people will come into the space. And if we get tripped up, then people will say, well, there was a reason for that because it was crypto, and I really don't want that to happen.
Yeah. Listen, really appreciate the time. Like, let's keep it short so people can like digest it, because I'm thankful for what you're doing and thankful for what Milo is doing. So where can people, play with the calculator at milocredit.com? Is that a good call to action?
Yep.
And what's your Twitter?
That is. So J Rupena is my Twitter. We have a Discord group as well, and then you can find us on the sort of different social feeds, Instagram but mostly Twitter.
Perfect. All right, everyone. We'll see you on the next one.
Hey all, this is Brian. You can reach me on Twitter at Brain Harrington. Shoot me a DM with any feedback from today's episode. This has been a Choice App production. Bitcoin is becoming centric to personal finance, and we want to help you learn how to better engage with Bitcoin financial services. None of this is financial advice and is for education and entertainment only.